collateral to send people. So I'm just kind of experimenting with it for now, but I think it's a good format for expressing thoughts, and hopefully is good signal to like other people who are maybe skeptical in general of the space, that there are like real humans behind this. It's not like cloud stuff or something.
I thought I was a bot.
That's number 10, man. You are
a bot.
That's right. Reddit has gotten a little more fun. It's a little sassy. I'm not gonna lie. It's a little sassy over there, but it's good. It makes you think more. You know, you kind of get programmed into these one-liners on X, you know, because it's kind of like what the algorithm pushed, and no one really liked like long-form, thought-out responses. And then you go to Reddit and like you do a one-line, they're like, bot. You're like, all right, we could do this dance then. Like,
you've been killing it though on there, Munch.
Thanks, man. It's definitely a better medium for like longer form writing, like thought out. Tans has had some great ones. Dude, I've just been taking your pictures on TikTok and going under them and pointing to them and then explaining them. I'm getting like over 1,000 views. I'm like, thanks, Cal.
Nice. Yeah. I mean, I think generally, like, at least for me last year when there was just so much noise around this stuff, whenever I would see someone like Mung actually was my introduction into like kind of just ETH meme coin ecosystem. And so was Super 8. Both of them were kind of, and I knew him through Giga, kind of convinced me through like a social proxy that those had legitimacy. Because I was just like, these are clearly not like dumb people, you know? Like this is not.
That was Tans for me.
Yeah, Tans I didn't know at the time, but you know, it just like it was very good validation. And so I think Reddit is an even better medium for that because there just are like a lot of trolls on Twitter. It's kind of like a waste of that effort to some extent, not a full waste, but the eyes on Reddit are like perfect for that, I think.
No,
Reddit,
great.
I feel like Reddit is more of like a back and forth dialogue too. You know, people are like actually engaging in the topics and concepts, whereas like, you know, Twitter is like just kind of like a quick hit, you know, dopamine, like move on to the next tweet kind of thing.
Yeah, it is more conversational than like TikTok or Instagram or YouTube though. So that's one thing that you know, I like about those platforms is that it's like a back and forth rather than just kind of a broadcasting, you know.
I agree. I also think the incentives for Twitter now have, I mean, just because of monetization and the way it works, like you're fully incentivized to try to bait people or draw stuff out. It's just a little bit of a shame, but I mean, I get that's where social media is trending. So, you know, it is what it is.
No, definitely. I think Twitter for meme coins is just going to keep getting worse and worse in that sense. Just the way they're banning people without any real repercussions, you know. And then, like you said, like everyone's monetized, so it just turns into this huge engagement farming thing.
And to be fair, like I think this is like something they're struggling with, which is also something that a lot of people within crypto struggle with, which is like, how do you discern like the legitimate things from the illegitimate things when there's so like there's just information overload at all times.
Yeah, it's hard when you've been in the space for a long time, I think, to think from a beginner's mind and try to understand what it's like to be a new person and just completely question what the hell's happening, to be honest, because it's a lot to take in, and everybody's trying to pitch you something. And so you're essentially walking down like some version of like a mall kiosk, I don't know, fair or carnival. And everywhere you go, there's like a new pitch, and it's hard to tell. You can't even see their faces and stuff. So it's hard to like, you legit? Is there more to do with this? You kind of have to invest like 3 months or have like a friend onboard you. And
then you got this streaming coin meta, which is kind of hilarious. You go and look at like what it is, and it's like people eating their fecal matter, drinking their urine. I saw a lady have a live birth on stream yesterday.
I'm so happy that I'm spending zero time paying attention to this.
Yeah, it's not even in my algo at this point. But also like it's pretty easy to ignore because I mean these aren't even, it's like the death spiral is so real. There's definitely a euthanasia coaster happening here. None of these are even really moving. Like
No.
it's a clear grasp at straws. So
Dude, can you imagine streaming eating your own shit and you top out at 35K market cap?
there's not a
You know
single.
what I mean? Like,
By the way, there's not a single part of that I can be candid.
Hey, cryptic. That's a movement, bro.
Yeah.
It's a movement coin. New video.
Oh man.
I have to be careful if someone thinks I'm serious.
How are we looking on live? All right.
Yeah, I'll probably give it at least 5 minutes before we get started.
But yeah, that's like we were saying, the research for this episode was tough. Tough to digest. And it's one of those things where, you know things are bad. So we're all optimists, right? So you go into something like this and you're like, all right, well, we're going to find the silver lining. And there is ways to find it. Don't get me wrong, but it's overwhelming, just the data. And more importantly, where it's trending. That's always like what I'm looking at, right? Like the forecasting is so important. Like, all right, I know where we're at right now, but where we forecasted to go. And it's like, well, this doesn't look too great. Yeah. Whatever way you cut it. So, it's going to be interesting. We're at I would compare it back to like the 70s in that sense, like a pinnacle time for currencies in general. I would say that was the last time there was a real decision to be made about currencies. It was back in the early 70s, right? When we decided to take the dollar off of the gold standard. I feel like we're kind of at a real pinnacle point like that now today. Yeah. It just so happens that it evolved and now it's digital, right? It's crypto. But I would say that's the closest parallels. But even in that, the data is not the same, right? Like we hear about stagflation and stuff, and you go look at the data from the early 70s. The last time we had real stagflation was then 73 to 82, which makes sense, right? You pulled the dollar off the gold standard. But you were talking about inflation that was double digits, anywhere from 11 to 13%. Unemployment was 7%, 8%. So the numbers don't match up in that sense. But then the price, right? The purchasing power does.
Yeah, like one of the things, I mean, this is like a related topic. Like one of the things that's also tough to deal with today is like the knowing what data to trust and people having an understanding of like what methodologies are even being used, because if you look, there's a number of like true cost of living indices out there that are different methodologies and calculations than the core CPI.
Even CPI in itself, right? That formula has changed.
Yeah, they're like 2 or 3 times higher, and I think just like on a more intuitive level, like we all know that the cost of living and inflation is higher than what is reported. Like
100%.
I saw someone posted a good meme on Reddit. It was like, I think talking about probably more millennials than anything, and it was like born too late to hit the .com bubble, like born too early. Born too early to become a TikTok superstar. Born just in time to watch my sandwich price go to from $5 to $5. Yeah, something like that.
Yeah, that was a good one.
That's so relatable.
Yeah, I'm pretty skeptical of the stats that seem to be most readily available. Like if you just Google like inflation versus wages, it'll tell you like in the first few links that that wages have outpaced inflation, which I'm skeptical of. And I've seen other statistics where it's not even close. So
no, we haven't had real wage growth in 3 decades. Like it's insane since the 90s. Like but yeah, that's the problem, right? Like the famous line is like, stats don't lie, but statisticians do. And like Matt, I think you said you were a CFA, right?
Yeah.
Yeah. So like I did that undergrad, studied for those tests senior year, and you kind of learn that, right? There's a word for it, how the stats can be not manipulated, but how you gather them. What's that term? Oh God.
I don't know. Like I had a friend who was an analyst, and he had this line, and it's like, torture the data enough and you can get it to say whatever you want.
Yeah, no, truly. And like you said, there's this thing that happens now where they put these numbers on the screen, right? Like unemployment and CPI, and they're like, look, see, it's better. And then you go to the store and you're like, this banana's $3. This doesn't make sense. Like it's not like the math's not mathing here.
Yeah, I think there's two other things that are interesting, like on top of this. The first is it's scary, the trends that we're in, but I think like what's more shocking to me is the longevity of them. And obviously, like they really started to accelerate around 2008 and then hyper accelerate in 2020. But this is like, I mean, this is kind of 40, 50 years in the making. And I think we're who knows, like maybe where in the parabola we are, if you fast forward 10, 15, 20 years, but we're certainly at a point of very few options to return or no return. And no one knows exactly what the answer to that is. I don't really, I'm not a macro guy, nor do I really even pretend to be like a financier necessarily. I like to think of myself as more of like an angel investor in some of these things. But it was interesting because I listened to, as part of the research for this, I listened to Jerome Powell yesterday, and I don't know if you had a chance to listen to it, Matt, but I'd love I guess a more educated financial opinion on it. But it seems very clear that there is not much hope even from like the highest kind of voices to quell some of these things. Like it seems like there's a white flag in the air.
Yeah, I like spent a lot of time thinking about this, going through the data, and like I unfortunately only see one real path out of this. Well, I shouldn't say that. There's a mix of like tools and strategies and tactics that can be employed to get us out of this. But one piece of that is consistent across any of the possible like paths that this takes is currency debasement. Yeah. Like there's just no way that we're going to be able to avoid currency debasement and devaluation to monetize some level of the indebtedness that exists right now. I can't see a path where that's not a tool that is employed in some way, shape, or form, because like Ray Dalio has that whole framework around like short-term debt cycle, long-term debt cycle, and like where are we across those two cycles? And like, we're at the end of the long-term debt cycle, which is like to your point, Cal, it's like a 40 to 50 year thing.
Yeah, it's like 2027,
so
right?
Like rectify, 40 to 50 years of this like trend of, just kind of being levered, the world is levered long right now. Right. And it's like, how do you deleverage that well and in the right way? And there's certain things that need to be true in order to do that. And from my perspective, this goes right into the topic that we're going to talk about. Like they're just not true right now.
I think he says 2027, right? That's the end of the long-term debt cycle, which makes sense. And
yeah, I also think like these things, they tend to like at the end of like these cycles, they're kind of like slow moving train wrecks until they're not. So it's not like they happen like over the course of a weekend. They happen over the course of like 2-3 years, and it like creeps and creeps and creeps. And then all of a sudden there's sort of like, the moment where it accelerates and people wake up. And then it speeds up. But I do think it happens like quite slowly, and you can almost see it in slow motion.
Yeah, I think 39% of corporate debt comes due in 2027. So so you're talking about how does interest rates affect that? I mean, the debt on our government debt has a blended interest rate of like 5 to 6% on what, $37 trillion. Like Matt said, what do you do? What do you do about that?
I saw another stat the other day. Who knows if it's true? I think it's true. I saw another stat the other day though that like our debt service cost is now outpacing our military spending.
Yep.
And this is not a good thing at all. You know, this is because it's indicative of sort of a shift in the balance of power, right? If you're spending more on, because your military is a strength, your debt service cost is like sort of a weakness, right? And so if your weaknesses are getting larger in magnitude than your strengths, it's not good.
Yeah, I would add, like, it also incentivizes more printing, and so you get to this point of reflexivity where, like, people's backs are against the wall, and their only choice is to revert to short-termism, and that also applies to like the centralized entities. So now you have the people who are supposed to preserve like the long-term interests of everyone, creating a situation where the average everyday person is forced to think more short-term for survival, and also has to think short form themselves. And at a point there becomes like an inevitability, if you think from like first principles, that of course this is kind of happening because everyone has started thinking in 6 to 12 month time horizons, even the people who are supposed to be in a position of preservation of more long-term values. So it's very unfortunate, but it's reflexive. And we are certainly in like the, acceleration portion of that. It's quite clear. I wanted to talk about a few of these stats. I don't know if anyone else wanted to add something to that before I do that.
Tans, do you want to kind of kick us in with?
Yeah, sure.
Yeah, go ahead, Tans. I'll go after.
So I'll just start this off with an anecdote, and then you can jump into these stats. So welcome, everyone. Today I want to kick off this episode with an anecdote because the story I'm about to tell you is illustrative of how absolutely brutal and real the cost of living crisis is today. So a few months ago, someone who's really close in my life told me a story about when they were working at Google just about 3 to 5 years ago. They were what's conventionally seen as a high-paid and highly skilled employee at obviously one of the top companies in the entire world. And they came from an Ivy League background and worked their ass off since the age of 10 in order to eventually end up at this job. At the time, they were living in New York, which was non-negotiable because they were required to be on site. Now, they were making about $300,000 per year, but half of that was granted in Google stock, which wasn't able to be traded for a period of time. Now, obviously, this is a dream amount of money for a lot of people. So it's not my intention to discount the value of money, but simply to give you a perspective on how bad the cost of living crisis truly is. So they were paying nearly 50% of their income in taxes. And of course, the rent in New York City is incredibly overpriced. And combining that with all the normal living expenses like food, utilities, etc., literally just the basics, had them essentially living paycheck to paycheck. But it gets worse. So during the COVID pandemic, when property managers notoriously raised rents as much as even an additional $1,000 per month or more, they had to look back at the economics of their income versus their expenses. And after doing the math, accounting for the rent increase, they realized that they had about $5,000 more in expenses per year than they had income. So basically, working a $300,000 income per year job at Google, they were actually losing money by maintaining that job and their cost of living in New York. So basically, working at the most prestigious job that they worked like a dog all of their life in order to get, just so that they could lose money every year. And anyways, long story short, they ended up escaping from corporate and taking an unconventional path that I won't discuss here. But again, long story short is that the conventional paths are no longer working. So,
that's real. I don't know if any of you have lived in New York City like that, but I did that for from 2017 to 2022. Me and my wife both made. I mean, we didn't make 300 together. We probably made about 300. And yeah, I mean, our rent was $4,200. Food was $500 for us and a baby. So I couldn't imagine if you had 2 or 3 kids. And during COVID, there was a thing that happened with the utilities where they throttled our utility bill, which didn't really change the price, to be honest. It was still $200 to $300 a month for utilities, either in the summer because of AC or the winter because of heat. And then 2 times we got hit with $900 Con Edison bills. And they said it was because they were throttling the price of energy during COVID, and it was non-negotiable. And, you know, luckily we had the money, we had money saved, but I mean, how is that realistic? You know, like it's no, that's real. That's a real thing.
And, you know, people might say like, oh, well, you can just move somewhere where the cost of living is much less expensive. But if you're required to be on site for your job, then that's not really an option.
Or if your friends are there, your family's there, like there's other things that matter too, you know, that like are sort of basic that people should be able to have those things.
Yeah, I would add to that too, that like I think there's like the polarization of people who have either inherited wealth or have wealth through some other means, or, you know, we're a success story in the past who are now in a good spot. I think it's as you said in your post, Tans, like even for those who are kind of like newer to the 1% or hovering around it, it's frustrating to them too, because they're like, here I am essentially committing my life to, you know, trying to get ahead to some extent, but instead you're playing some, you know, kind of version of the hedonic treadmill you were trying to get off. And it's like your entire life's dedicated to it. And the alternative is just kind of like a deprecation of that. And so I think there's a lot of like very palpable angst around that, and rightfully so, pretty much from all of those parties. And especially because, you know, there's just kind of like a group of people who I think are just kind of unaware of this reality, or maybe they're slightly aware. And by that, I mean like the 1% or slightly less at this point, or however you want to define like those who have made it, who are living like a very, very good life and are somewhat unaffected because they have the boomer S&P. They have these vehicles of wealth preservation. And if you already have money, then like life's probably better than ever, right? Like you have all these things at your fingertips that you didn't have 20, 30 years ago.
Tans, I think you hit on an important thing too, which is your friend decided to take an unconventional path in the end. And there are similar parallels with my story. In the first 6 or 7 years of my career, I was going like the conventional path. And, you know, you would have your year-end salary and bonus conversations, and I'm watching it just go up by like 2%, you know, for periods of years. And I'm like, this can't be the way. Like I'm not, I don't want to do this for the next, you know, 25 years of my life, and do it this way. And so I chose an unconventional path. And I think choosing the unconventional path was very uncomfortable and difficult, but it was honestly like the thing that saved me. And I think this is an important thing for people to think about with respect to their own circumstances, because what we're talking about here, what we're doing here is a bit unconventional. But sometimes that is what it takes to be able to, like, you know, climb your way out of the kind of like the systemic circumstances that will just lead you down a path to potentially nowhere. And I remember when my wife and I got married about 10 years ago. And when we got engaged, we decided to combine. We were both living in New York City, and we decided to combine bank accounts. And I was like, oh, this is going to be great. Like, we're going to combine bank accounts, and my wife's going to have all this money in her bank account, and it's going to be great. And we combined bank accounts, and I think together we had like $13,000, and we were like about to start a life together. And we're like, oh, geez, like, all right, this is going to be tough. But like, it's real, it's true. And I think a lot of people are experiencing this.
Yeah, and it's frustrating because I'm sure like even 10 years ago you probably had a good job, and like on paper you were what like a lot of people aspire to, but if you peel back the hood, like you said, you were struggling. So I think that's what like a lot of people don't realize is that these days, even at the higher income ranges, you're struggling as well, maybe in like a slightly better environment than like people in lower incomes are struggling. And you're referring to like the 2% raise per year that you were getting. Now, like, imagine some of these people that are working like closer to minimum wage jobs. Like,
yeah.
I've done that in the past, and I remember like the kind of raises were like 50 cents per hour, something like that. So yeah, it's just really, really brutal.
Yeah, I would add to that, like with my own just anecdote. I got into startups originally because I grew up like in an environment where like my parents had like very, very stable jobs, but not a ton of like mobility. And so I just thought it was like very interesting. I thought like, it was a more dynamic life. And I really kind of like idolized like the kind of like Steve Jobs type of figures of the world. I saw them as like very true visionaries. And it's been interesting to see over the last, call it like 15 years, like the commoditization of like a tech founder. And, at first that kind of like upset me a little because it kind of de-romanticized that world for me. And the idea of like kind of trying to complete these Herculean tasks, which obviously like we kind of get here. And so that's been a nice outlet for that. But I started to think about why that was happening. And I realized like a lot of it has to do with what we're talking about right now. And it's kind of a response to realistically what is like a very narrowing experience that many people have in how to make it out of this race. And one of the only ways to make it out is to play an equity game, because playing a salary game, like you said, Tans, like even if you're at one of these like the ultimate prestigious jobs, whether that's like a surgeon, you have to spend 15 years, you have to go through residency, you have to pay for med school. If you make it to like an elite hedge fund or something, that's great. That's like what 0.01% of the population. And then if you go to a Mag 7, then half your money's locked up in equity. And all of those jobs can kind of help you, but you're not really going to be able to hit escape velocity. And the only way you can do that is by becoming a founder. And so I think that's why there's so much like kind of fetishizing of that career path now, because there's like pretty much no other alternative to like really make it and provide like a sense of kind of social security for yourself and for your family, which I think is like a very innate trait that people want to have.
Yeah, I'm glad you mentioned that, because clearly it's important to understand the problems, which I think most people do. Like even if they don't know the stats, they're feeling it in their own day-to-day life and intuitively. But I think that's where like a lot of people stop, is just by kind of internalizing the problem and then kind of complaining about it, or like expecting a political solution to that problem. So the way that I see it is that like once you understand the problem, you have to switch to being solutions focused. And in order to do that, like I think we can use deductive reasoning. And so the way I see it, like once you recognize the cost of living crisis, you have a few options. Number one, you can work more hours at your current job. Number 2, you can find a better paying job. Number 3, you can downsize your living expenses. Number 4, you can start a business. And number 5, you can invest in assets. Now, let's zoom in on each of those options. So chances are that you're already working full time. So working more hours without increasing your pay isn't going to be sustainable. For number 2, and that's obviously because of burnout and various factors, but for number 2, you always have the option to seek better pay, but you may need to acquire new skills, step outside of your comfort zone, and maybe the current field you're in has a general salary limit for the work you do. Number 3 is downsizing living expenses, which I think it's important as a fundamental rule when you're on your growth journey in the beginning stages of wealth creation, and even as you become wealthier, so that you can preserve capital. But there's a limit to the extent these costs can be downsized. It's difficult to forecast financial emergencies. And ultimately, as humans, we want to grow the quality of our lifestyle rather than downsize it. Number 4 is a great option as a long-term strategy, but 1, it will be extremely demanding. 2, the environment is hyper competitive, especially with the pace of changing technologies. And 3, it can often take years for a business to even turn any profits. So this leads us into number 5, which is investing in assets. And it's important to note that none of the items on this list are mutually exclusive. You can work on changing all 5 of these items. But number 5, in my opinion, is an absolute necessity, regardless of the infinite number of paths you can take to mitigate your own personal cost of living crisis. And by using that same deductive reasoning, we can dive deeper into what kind of assets can we invest in. And I think the major buckets there are real estate, stocks, bonds, precious metals, and cryptocurrency. And if we go further and we look at the real estate market, it's obviously incredibly inflated. These days in most areas, at least in the US, it's difficult to find a decent place, even for around $500,000. And just because these real estate has gone up over the past 50 years or however long it's been, there's no telling that that trend's going to continue. If we look at stocks, I think they've slightly outperformed real estate over the last 50 years in terms of the S&P 500, which I think is sort of interesting because people will typically say oh, look at the boomers, they could just pay this small amount for a house and then end up in in a well-off situation. But I think I had seen the stats, and just investing in the S&P 500 actually outperformed real estate. So then we have bonds, right now you can get a 4% risk-free rate, but that's barely outpacing the on paper inflation. Precious metals, obviously gold has been outperforming over the last year, but that's kind of a new phenomenon. They've been pretty stagnant for a long time. And then that leads us into cryptocurrency. So I'd say those first 4 options, they're probably not going to be significant enough opportunities to kind of mitigate this cost of living crisis when you have a very uncertain future and this trend of constant inflation. So then when we look at cryptocurrency, obviously crypto has like provided the most significant returns over the past 15 years. But we look at Bitcoin now and it's like already a multi-trillion-dollar market cap. And at the same time, like even though Bitcoin, is inflated, you don't want to just completely gamble, because like, as we all know, that's like the easiest way to lose everything you have and start over from square one. So I think ultimately, if you use this deductive reasoning, you kind of land on, most people that like really need a change is that you land somewhere in cryptocurrency, and you don't want to gamble, and you also don't want to like invest in these assets where they seem not to have as significant an opportunity that you need. So anyways, all of that to say is that ultimately I think you can kind of land on an asset that has trust, and you can still see a significant opportunity for growth. And I think that's SPX 6900.
Yeah, well said. I'd love to like flow chart that out, because I think it's when you think about that line of reasoning, you do realize like there are very few legitimate alternatives, and the alternatives tend to be much like higher risk, I would say.
Yeah, I think you have to be thinking about alternatives here. You have to. It's irresponsible to not be thinking about alternatives generally. When you think about like what a cost of living crisis is at like a more metric oriented fundamental level, it's very similar to the framework that Ray Dalio applied to a beautiful deleveraging. So he says a beautiful deleveraging in a system can happen when incomes are growing at a faster rate than like liabilities are expensive. And then you have a very ugly sort of deleveraging or like widening of a wealth gap when the inverse is true. And so what the reality is today is that it's that the inverse is true. Like for the vast majority of people, incomes are growing at a slower rate than the rate that their liabilities or expenses are growing. So like how do we get out of this as a society? Like we have to do something different. There's that old adage. It's like the definition of insanity is doing the same thing over and over again and expecting different results. You have to do something different here. And that doesn't mean taking like extreme risk and, being a cowboy and crazy, but you really need to think about layering in some things that might look like they're at, the frontier or edge or, fringe of markets. But this is like one of the ways that you can get, you can kind of reverse that trend. I think the other interesting thing that's becoming much more obvious to me now, and you're starting to see some people in some like pretty high seats in society talking about this as well, is the idea, especially in the US, and I think this is the case in a lot of places, the idea that there's like these two parallel economies. There's the haves and the have-nots, and they're basically living in entirely different worlds. And the McDonald's CEO, I think, like went on CNBC and talked about this more recently, if anyone has seen that clip. But
yeah, that's a good one.
This is very true. And I think a lot of people, when they think about like the haves and have-nots and this sort of like wealth disparity divergence, they end up in this argument about like capitalism versus socialism. And I think this is kind of wrong to like make it so bipolar and focus on one end of the spectrum or another, because there are other like smart, wealthier people who I've talked about this problem, and they're like, yeah, this is really, really bad. We need to fix the kind of like wealth gap, because it's actually like you're capitalistically incentivized to fix this, because if we don't fix this, everyone's in trouble. This is going to have really, really bad long-term implications for everyone. And I think a lot of wealthy people realize this as well. And so to me, this is like not even that like controversial of saying like, oh, well, I'm a capitalist or I'm a socialist. It's just like, all right, like let's take a step back and be very pragmatic about this. The gap has gotten so wide that this is a really bad thing that we need to find creative solutions for, whether it's policymakers finding solutions or markets, or entrepreneurs coming up with new ways and new tools and new tactics and new assets to try to like rebalance some of this. We have to keep going down this path of trying to find different creative ways to rectify this. Because if we don't, the implications are dire. And another thing that Ray Dalio talks about when he looks at like the rise and fall of empires, he has a framework that includes, I think it's like 3 or 4 factors that lead to the fall of an empire. And some of the factors are rising external conflict. So conflicts between like the US and China, let's say, right? There's rising internal conflict, and rising internal conflict comes from things like, the wealth gap and polarization on socialism versus capital, left versus right. Like you just see these forces like really, really at odds with one another. And so this internal conflict is like, it's a very, very bad thing for America and for society, like capitalistically speaking. And then the third thing is indebtedness. And so when these things line up, like you have like external conflict, internal conflict, large indebtedness, this is how things go really, really south. So we're all incentivized to try to, figure out how to fix this, but we can't keep doing the same things over and over again. And we can't just think like the system is going to fix this for everyone. You have to get creative and you have to get, out there on the risk curve, I think.
Was that the Ray Dalio diagram right there?
Yeah, I was a little slow pulling that up, but
it just disappeared. I don't know if you want to pull it.
Yeah, I can reshare.
Yeah, bring it up.
I think in general, yeah, I think it's useful to have the visuals in some of these things when we're talking about them. So I'll try to, if there's something like easy like that, I'll try to pull it up when it's relevant.
And yeah, I think it's just going off what Matt said. I think it's important to understand that it's no matter like what level you're at, like even if you're at, the tip top of like income and power, it's still in your best interest to kind of remedy this situation to an extent, because if we look back historically, like when these gaps widen to a point, and like a large percentage of people are just left just completely like disenfranchised and desperate, that's when revolutions happen. And that's historically when violent revolutions have happened.
One thing that was interesting when I was doing the research was, so like this problem is not just in America. Obviously, like I know it's in America because I live here, but you go and you look at Europe, same thing, Germany, Ireland, it's all over the Western world. And I was laughing with like what I say, they're not coming to save us. Like what I mean by that is in Ireland, this is real. I read it and then I watched it. A political figure told people to deal with the cost of food crisis. He said, the first thing you should do is not go food shopping hungry. That was actual advice from a government official. And it's like what, and what was interesting too is over there, they have a little different situation, right? They actually have a cost of energy crisis is way different in Europe than it is over here because of the war in Russia and Ukraine based on natural gas and oil supply chains. So they actually have a higher energy cost over there than we do over here. But in the end of the day, we're still feeling the same thing. And what that really comes down to is money printing. And I kind of look at it as like an addict. So since 2008, in order to keep to seal the cracks on these global economies, they started printing money, right? And they never really stopped. They stopped there for a few years in like 2017, but not really. And then you take COVID and you really blast it again and kind of break the whole thing open. But since global economies are so interconnected, once one of them starts printing, they all have to start printing, right? So that's why like this problem is global. And just like an addiction, if you just stop it, there's a ton of pain, right? And just stopping this would lead to a debasement, like Matt was saying. And that kind of is one of the few ways out of this, would be a debasement. But to do that, there would be significant pain. So instead, what they do is, just like an addict does, he goes, well, I'll just take a little less, and so they start to print a little less. They try to do these little short-term remedies to not feel the pain as much. But in the end, it does not change the fact that you are still addicted to whatever it is. In this case, it's money printing. So we have this system that has been kicking the can down the road since 2008. No president or government official wants to be the guy to stop it, right? That's not what they want their legacy to be. So you kind of just have this problem that just slowly over time gets worse and worse and worse. And like Matt said, it just kind of creeps up, and then there's going to be something big. And I really think that's where we're at. And I really do believe that's why crypto has became to the forefront, because us as humans, we're always going to try to innovate to survive, right? That's just what we do. And I think in 2025, that innovation is crypto. And for retail, the best way out of this is, like SPX, these coins that could actually answer more than just the monetary side of it. Because again, this is felt worldwide. So when you could tap into this feeling globally, what it does is it really is a numbers game, and then it's a coordination game. And there is not a single community that is more coordinated and global than SPX. There's not. I mean, check the chain, it's the truth.
And like in the modern era with the technology that we have available, speaking earlier about like violent revolutions in history, like we have the tools now to kind of capture that same energy and use that same kind of rhetoric without staging a violent revolution.
Mm-hmm.
And, we can kind of take back our economic power through like an on-chain revolution or movement. And I think that's exactly what SPX represents.
I agree. And Nick Carter wrote a Medium post maybe like 5, 6, 7 years ago. It was called A Most Peaceful Revolution. And it was all about how Bitcoin was sort of this peaceful revolution that was like flipping the chessboard on the traditional system. And I loved that piece. I think it's like he hit the nail on the head on so many things. And I think that same energy and that same phenomenon will continue to reemerge so long as the system is not serving people generation by generation. And it should. And we need to keep doing that.
I think I've spoken about this like a lot of times. Obviously, we all believe it. But I think in general, people are kind of, I guess there's two factors. I think the first is like I mentioned before, people have to kind of submit to short-term thinking to some extent just out of survival. And so I sympathize with that. Like I don't blame anyone for that, but I think it's just like a natural kind of reaction to what's happening. And then also obviously like there's kind of a conditioning from social media that has happened to all of us. But I encourage people to think about the long-term implications of, as you mentioned, Manj, what is clearly not a trend that's slowing down. It's easy, I think, to think of meme coins as like just kind of all the same, as trading vehicles, as an expression of like financial nihilism, and therefore like having a pretty natural low ceiling. But if I've learned anything in like years of startups, in years of like selling, you have to start with the problem. You have to start with the size of the problem, and you have to start with like who the problem affects. And that will help you determine value. And investors want value. Like when you think about why is NVIDIA worth more than the entire, crypto market? Why? Because AI in theory, is a solution to almost all problems. Like the TAM is actually so large that like most humans can't comprehend it, right? The same can be said of Bitcoin and, a select few other assets. And, but this these also begin with the users. They begin with the problems that they solve. Like if AI did not solve problems for people, there would be no buyers, there's no market for it, and investors would therefore not be interested. And so when I think about the potential of these things, I think about the size of the problem, and I think about how, SPX in particular solves these problems. And I think it's very apparent to anybody who spends ample time or even some time, with Aeons and in these chats, that there is like a very profound impact, both like psychologically, spiritually, obviously financially, that even the idea of hope can bring to people. And so I think people are really underestimating how much interest there will be in a thing like this, even outside of, say, like the 99%. Again, like you have to start with the users and the problem that the users that's being solved for the users. And SPX just checks every single box there. And I think it's really hard to argue that we're not in the very, very early innings of that process.
And just like briefly touching a point onto the long-termism versus short-termism, I think like conventionally we're taught that long-termism is kind of thinking and building in decades. Whereas I think at the stage that we're in with technology and social media and network effects, they've significantly shortened that adoption curve. So I think like long-termism can even be viewed just like in a matter of a few years, because I mean, like, the people that I know who have had significant like financial gains, whether that be from like building a business or making investments, whatever, most of the time those changes can happen going from kind of zero to having a significant impact within just a few years.
Yeah, and it's I mean, you're gonna make, whether it's about quote unquote making X dollars or whatever speaks to you about wanting to be on a path like this. There's just no doubt that in being a part of something big early, you're going to be doubted. There's going to be scrutiny. You're going to feel a little crazy, and you're going to have to deal with that for an extended period of time. And there's just no other route.
Unavoidable.
What's that?
It's unavoidable.
It's unavoidable. There's no other route to being early to like a massive pre-consensus idea. It's just not possible. So it's something I think, it's like, I think you can find comfort in it, but you're right, Matt. Like it's completely unavoidable. And so I think it is nice that there's such an active network of Aeons on every single platform now, because I think hopefully it makes people feel a little less alone in those ideas. It's been interesting to watch the Reddit stuff. And I actually was talking to a few Aeons about like potentially putting together, like some basic like kind of objection handling responses, because, I think Reddit has revealed that to people who are completely unfamiliar with SPX, like it sounds like a crazy idea again, which is a good thing, because that means there's like actual new ears hearing it. It's not someone from, CT or something that's already heard about it and they're like, okay, yeah, maybe it's like a good narrative for XYZ reasons. It's like, this is actually like a brand new ear, and tell me why this solves a problem, because I don't get it from first principles.
I also think there's an expectation thing, which is, I don't know, maybe tens, maybe it was different for you. I don't know many people who are in SPX at the moment who didn't start out as skeptical. So this is like the natural response the first time someone hears about it. I certainly was skeptical. I was like, what is this? Yeah. It doesn't make sense to me. And then as I started going deeper and meeting people and seeing the daily actions and seeing the consistency and seeing how the network was growing in terms of, people that this idea was resonating with, understanding the thesis, then it makes more sense. But I think you have to you should not be surprised if you're putting an idea out there and you're getting kind of like criticism or skepticism, because I think this is just like the natural order of the way people find their way into this. So that's like step one of a multi-step process.
And I think that's good, just generally speaking. I think a huge problem in this space is we still get funneled into these like silos where everyone around us agrees with us. And there is nothing worse for sharpening your thesis than just being around a bunch of people that say yes or agree with you the whole time. That's not how critical thought works. That's why I think it's really good to always be talking to just regular people about this, because you will get you'll get to understand where they're coming from, which I think is important, right? That's another thing that happens here is people just stay here. They're only online. They only interact with people online that are in this space. And then you get a really skewed idea of how the general public looks at crypto, meme coins in particular. So I think it's really good to talk to retail in that sense in person. But if not, Reddit actually has come to be something good for me because there's a ton of pushback, and that's good. You want to see as many different angles as you can to your thesis. All right, so they agree with this part, but they don't agree with this part. Let me think deeply about this. Let me work on this part. And what you do is it's iron sharpens iron in that sense. And then what you have is, one, you get more than one pitch, but then is important, right? You got to know who you're talking to. So even on Reddit, if you don't know who you're talking to in that response, once the conversation starts, now you know, like, okay, they don't like this part about it. Like I had a guy that thought it was bearish that we're on Coinbase. And he said, like, my point is wrong about SPX being GME 2.0 because they could just shut down Coinbase, which in theory, he is correct, right? Like I get where he was coming from there. But the flip side of that was like, well, yeah, so we've been listed on Coinbase for 2 weeks. 90% of the people don't own it on Coinbase. But I get your point, right? And I had to go back to the drawing board and really think about that. So I just think it's good to get pushback. It's definitely discouraging in the beginning because it just pisses you off. But in the end, in the long term, it's good. It just makes your pitch sharper. It makes you sharper as a person. And just kind of more tools in the toolbox.
It's actually, I would argue, I totally agree with you, Maj. It's one of the only ways to like truly develop your own long-term conviction is to be challenged by people that you respect. And also to have to like kind of think through their arguments, why it could be right. And more importantly, like, are you actually right? Does what you're saying have real legitimacy? Do you actually believe it? Can you find a way to like kind of pronounce the things that you're claiming? Or is that difficult? Because if it's difficult, what happens when you're in a multi-month kind of downtrend and you have a pit in your stomach and you're not really sure if the future you predicted is going to happen? Like you're going to question yourself. And so that's actually why I don't mind downtrends. And like, the beginning of this year was really good for me. It's actually why I got more active on CT, because I was like, I have to figure out how real this is for me, and after thinking more about it, I was like, okay, I'm convicted in this. I would much rather take the bet that I'm right here than I'm not. And I'm glad I did that.
Jeff Bezos has like a clip where he says, when building Amazon, I was stubborn on the vision and flexible on the details. Like he was not willing to give up the vision. So if someone told him he was wrong on the vision, he was like, I don't care. I believe this. It's binary. But I'm open to exploring different avenues and paths to be flexible on the details to get to the final vision. And that's how I feel about SPX. I believe the vision of what we're trying to do here is something that could very much help people. And if we're not getting there, we need to find new creative ways to be flexible on the details. Like you cannot convince me, whether it's SPX or some other alternative, you cannot convince me that a generational reincarnation of a Bitcoin-like asset is not very important for society. You just can't. I fundamentally believe that to be true. And when I look at the state of play right now, and I look at the market and the alternatives, I simply cannot find a better alternative than SPX. So that, like, if there were other alternatives out there that I felt like were offered as much promise as what SPX offers in terms of like delivering this type of outcome for people, I would be open-minded about those things as well. But I'm just like not seeing it.
Yeah, Bitcoin solved the problem, right?
for a period of time for a group of people, right? It didn't like finish the problem,
but
the problem.
Right. And, maybe that problem can't fully be solved by that vehicle, at least not in its current state, but that problem still exists and Bitcoin can no longer solve it. And so the question becomes, what happens next? To go back to what you were saying earlier, Tans, like when you go through the flow chart of possible outcomes, where will people go to protest the reality that that's being forced into their hand now? Because I think it's naive and antithetical to human nature to think that nobody will protest. And we've seen there's endless examples that say the contrary, especially like at a social scale that's relevant. So yeah, it's I think there's an inevitability to something taking I guess I don't want to say taking Bitcoin's place. There's kind of like a difference in the purpose of the vehicle, but the vehicle solves a similar problem.
And it's like, how do they balance that line, like, of pure gambling versus having the opportunity for asymmetric gains? And I posted the other day about this story, like as I was sitting in the sauna and listening to some Gen Zers speak to each other. They were trying things like like leverage trading and just gambling at the casino. So like clearly they're looking for those asymmetric gains, but they're most of the time they're just like losing all of their money by doing these things. So then it's like at the same time, even though like you're losing your money there, it still doesn't make sense to them to just go like the completely safe route, in terms of like S&P 500 or, they can't afford real estate. Even something like Bitcoin, I don't think that's something they're thinking too much about. So again, I think it's finding that kind of median between like pure gambling and some safety. And I think that leads into SPX.
I agree. I just want to quickly share a couple notes on the document that I put together yesterday. It's pretty straightforward, so it won't take me too long. But I've been enjoying putting some of these together. And I think it was really interesting to do a little bit of basic research. There's a clear focus of this document. But I think the point that I took away is that we are at this tipping point, so to speak. And that we're not just kind of like in a cost of living crisis, like we are in an acceleration of a cost of living crisis that has been underway for, decades. And now what's happening now is what took decades to unfold before is now happening in years, months, maybe not weeks, but very quickly, which is scary stuff. And there are some really unfortunate statistics that are on this graphic. Obviously, touchy things like homelessness, the price of homes, credit card debt. I think they're all important statistics, but I think the point is these aren't gradual changes. And when you look at like the math in the short or even medium term, we all agree these are probably underestimates. By the government's estimates, $120 today is $100 a couple of years ago. Half of renters are spending 30% of their income on housing. And in San Jose was an example. People are spending 88% of their income on their mortgage in some cases. And Americans are spending almost $1,000 a month per person on groceries on average across the country. It's completely unsustainable. And you can see it in the credit card statistics. You can see it in the overall, like every single format of consumer debt is at all-time highs, even with interest rates where they are. This is not like a temporary squeeze of some kind. Like there's a clear systemic breakdown, and acceleration is everywhere. You can see it. Like if you zoom out in housing, I think it's most obvious. $100,000 for a house in 1967 $1.1 million today, and the same minimum wage on a relative basis has 40% less buying power than in that same time period. So this is just a simple equation. Like, it's completely unsustainable. We can all see it anecdotally, but it's in the math too. And there's no question that like change is warranted. Some form of protest or revolt to some extent is warranted. The question is, how will it form? And I think that, you know, a vehicle like SPX redefines how that can happen. And instead of it having to be this kind of like physical battleground, which I think has not turned out to be very fruitful for anybody in the past, instead there is an alternative that allows for those who have not been winning to start winning. And I find that extremely exciting and profound. And even if you remove like the financial impact of it, I think it's an exciting thing to be a part of. And so I know I'm not alone in that belief, but it really reaffirmed my understanding of the problem to take a look at the numbers and see for myself that this is not something that's happening in isolation. It's probably not going to slow down anytime soon, and there aren't many alternatives to what's happening. And so any means by which we can come together to fight this, which I think we'd all agree is like an evil, is extremely inspiring to me. So
I think that's extremely well said, Cap. And I think your point around we have to find a way to come together to combat this is really important, because that's the only way something can happen here. And I think when I look at SPX versus other things, you could say, what's the difference between SPX? What's the difference between Bitcoin and other things? Like, it doesn't do anything. What's the difference between SPX and other coins? That, like, there's no, you know, you could say there's no difference at the surface level. The difference is in that the people are actually coming together here to effectuate the change that they want to see. That's the difference.
Yeah, coordination game. You know, it's you said that, and that one really stuck with me, because that is what it is. And I think the other thing is, if you could channel this frustration and not turn it into anger, but turn it into inspiration, that is a powerful tool. Powerful.
Yeah, I also think, like, I remember distinctly, I think it was earlier this year. This was like right before the tariff stuff, but when there was like kind of a lot of anxiety in the air around a lot of these like tokens. And this was like when I decided to just kind of like get more involved and kind of figure out my place in all of this. But I remember someone saying like, oh, all the charts like look the same. And I'm not really a chart guy, but like all the kind of like, I guess the 2023 to early 2025 meme coin charts looking similar, which I guess to some extent they probably did. But I remember thinking like, I can't wait till that's not true, because there's no way the story unfolds the same for all of these. And I think we are, you know, maybe very early stages when you zoom out, but call it 3 to 6 months into like initial stages of kind of like discovering that. And the devil's in the details, right? And you can tell when you spend time in various communities, coupled with, I liked in your Country Bitcoin interview, Southern Fried Chat interview, Matt, you said like with the on-chain metrics, I think both of those are important for kind of forming your conviction. You can tell the gap is kind of widening. And I think that's a net good thing for the entire space. And the same thing happened with non-meme coins, you know, with kind of L1s that had utility versus not, you know, with store of values that were true store of values versus not, et cetera, et cetera.
Yeah, I think another important thing to note is that there's no barrier to entry here. So like if you ask, you know, a lot of smart people, like what they think the most significant opportunities of like the next decade will be, they'll probably tell you things like AI, robotics, and crypto. And AI and robotics, like by the time those companies are public, you know, typically there's not as much room for growth there. and like how do you get access to like private rounds as, you know, just an average person? Like, first off, you're not going to be in the kind of like inner circles that would be granted access to those opportunities. And second off, you probably wouldn't have the minimum amount to invest in those opportunities. So then it seems like kind of the inevitable option for like the average person is crypto.
Yeah, crypto excites me a lot at just in totality, because it's like the restarting of capitalism in a new market, where you can kind of determine, you know, for yourself with whatever mechanisms you see fit, who the long-term winners will be. And it's truly a free market. You can't shut it down. Everything is kind of like, for the most part, I would say, outside of the, obviously, like the centralized VC coins, is organic. And, you know, anyone has the ability to kind of form a thesis and then act on that thesis. And that fluidity is just not available in private markets. And even the multiples that occur on those like robotics companies or something takes 15 years to play out. The best ones will do very well. But if you're a true retail participant and you're in the group of people that we're describing here, and you put like $100 in like an angel list, you know, aggregate fund or something, I don't know. Yeah, maybe the $100 turns into you know, like 200K best case scenario in 10 years. Like it's just not good enough, and it's illiquid.
Yeah, that's the thing, illiquid, right? I think that was really what caught my eye with these meme coins in the beginning, was the liquidity. I was like, wait, you mean to tell me this is a fully liquid market? Like that was really interesting to me, just compared to last cycle where, you know, especially on ETH, it was like, you got to give up a finger to make the trade, you know, like it was 30, 40, 50% of the purchasing price was gas fees. That did make sense to me, but it has evolved heavily. And I think that is enticing for retail. And SPX, it's cool at being on multi-chains, because I still do think that Solana draws in retail more because of the transaction cost. Now, I've had good experiences with ETH this cycle. Sometimes it costs me $5 to do a trade. Sometimes it costs me 40, and I don't understand why. You know, like I was messaging you the one day, Cal. I was like, wait, I don't get it. But I just think that retail having the ability to go to different chains is important, because no matter what, the message transcends across all of that. You know, like real quick, I could just tell you a guy that I'm good friends with, union worker, right? Makes 180 grand a year, bought a house 3 years ago. His mortgage is $5,500 a month. He has $40,000 in credit card debt because his paycheck is 100% of his, you know, his mortgage is just about 100% of his paycheck. What do you do?
Crypto has to be the solution. It has to be. It's the only thing out of, you know, Tans, what you said with robotics, AI, and crypto, and the way the world looks today and where the world's going. This is the only accessible, fully and completely accessible opportunity set available to people to rectify this problem. So it's so obviously crypto to me. And then what I think you need to do is, within crypto, there's a huge difference between the coins that you choose and the outcomes.
Yeah.
And you have to spend the time to understand which coins you want to be in and why, and have conviction and have a basis for that, in order to navigate this, you know, state of the world that we're in.
I'll add one like final thought to that, because I just had a quad espresso, so I'm probably talking too much. But if you, this goes back to our doomerism conversation. If you believe in human prosperity and I guess like a non-completely failed human experience and existence, you might as well, even if you don't believe it, you might as well try to invest and think like an optimist in case that reality comes about. And this goes back to problems and solutions. I agree with you, Matt. Crypto is one of the only, probably the only solution that truly can help solve this. And so it makes sense to have at least some exposure in that process, because there aren't many other paths out. And so either if you are a doomer or you are a skeptic, either you're right, or if you're wrong, you know, you kind of have some benefit in being wrong.
Any final thoughts here, Cryptic or Matt?
No, just say persist forever.
Yeah, just keep going.
You only lose if you quit.
All right. Well, thanks everybody for watching. We have a couple exciting episodes coming up with some.
Yeah.
The Thursday after next, we're going to have a Must Stop Murad on. And then 2 weeks from there, we're going to have Joe Carlasari. So should be exciting. Stay tuned in, and we'll see you next time.
Awesome. See you guys.
Bye, everyone.
See you guys.